After a long bull run, metal prices are suddenly wobbling, and the wobbles in the price of one metal in particular, copper, has the market more than a little concerned. Known as Dr. Copper, it has a PhD in economics, so the old maxim goes. It's seen as a good barometer of global growth, and right now the market is wondering which way it's going to go. Here's Philip Lasker.
The Reserve Bank Governor Glenn Stevens called it a huge historical event. It's the emergence of China. And that historical event has proved historic for commodity prices.
At this point in the cycle, when obviously commodity prices are high, cash flows are strong in the industry, and the implications for investors are that they need to be prepared for periods of volatility. And for companies themselves, the risks of investment and what they do with these significant cash flows have gone up.
Copper, the base metal that's said to be a bellwether for the global economy, has been displaying that volatility of late. After rising during the second half of 2010, it has proved more volatile since January. The price hasn't moved much since the start of the year.
What we've seen, it's dragging prices back down a bit, is two things. One, consistent rises in supply, and two has been the reasonably sharp rally in oil prices recently from a supply-driven event, which has created some caution over global growth.
But some question the reliability of copper as a proxy for global growth.
The copper price is strong today because demand is strong and it's being driven by China. Supply is weak and many companies are struggling to supply the copper market. And also, importantly, costs are going up in the industry. So it's becoming harder to develop projects.
Another issue which raises doubts about the copper price is stockpiling. A Standard Chartered Bank report says there are some 700,000 tonnes of copper sitting in bonded warehouses in Shanghai and other ports in China, suggesting the high copper price may not be the reliable bellwether which has encouraged massive mining industry investment and hopes of a strong global economy.
We've seen actually a doubling in the amount of copper stocks in China in the last 6 months. Although saying that, in the last month we've seen about a 15% pullback. So that's encouraging, and I think this is why prices are holding up.
And certainly over the last decade, at times China has stockpiled copper, but fundamentally the demand has continued to grow, and that's what we see.
But according to the Financial Times, the flattening out of copper prices has seen some miners hedging against a fall.
Some of the flattening out, as you talk about in the copper price, is just maybe some of that speculative investment coming out of the copper market, saying that every company is making good margins in the copper price environment of today, and really if China keeps growing, then demand will continue to be strong, and we think for the next couple of years at least, supply is constrained.
We don't see a lot of downside risk in the copper market. We think that fundamentally it's a very tight market.
The second half of the